The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
The stock of the day is Karoon Energy. Well, global investor sentiment improved slightly overnight as oil prices fell sharply after the U.S. President Donald Trump declared that the Middle East war could be over soon. The United States and Israel, though, continuing to bomb targets in a day described by both the Pentagon and Iranians as the most intense airstrikes of the war so far. So Iran's Revolutionary Guards have said they will block oil shipments from the Gulf unless U.S. and Israeli attacks cease. CBS News, CNN, both reporting that Iran began laying mines in the Strait of Hormuz, while President Trump, the U.S. President Trump, said that 10 mine-laying boats had been destroyed by U.S. forces. So again, it comes back to ground zero for the oil, for the LNG producers, but locally, notably for Karoon Energy. Couple things with Karoon, which I'm sure the guys will tell you. It is most directly linked with oil. It's not an LNG producer. It's an oil producer, and it has assets in the Gulf of Mexico as well as Brazil. But those ones in the Gulf, you got to think the energy from there will be in high demand if we see this prolonged energy supply shock, or if the energy supply shock does continue in a prolonged manner. So, Michael Gable, you're here with me in studio. Let's get a view on Karoon.
Yeah, so obviously, as you mentioned, its prospects are very much tied to the oil price. So we need to talk about oil for the next sort of minute or so. Yes, I'm very bullish on oil and energy for the past few months. I've been saying that the biggest opportunity in 2026 is in the energy sector. So ultimately, when this war is over, and supply starts running again, even though it reduced levels, the oil price is not going back to where it was at the start of the year. It was already rising. So the main reason why I've been saying for the past few months that the energy sector is, I guess, the biggest opportunity for this year is for a couple of reasons. So, the first major reason is that the supply just isn't there for the demand. So demand continues to increase for oil, but there's just been next to no investment in the oil sector for many years now. So supply is an issue. The shales in the US have pretty much peaked. So you've got this situation that was building up where the oil price was always going to increase. And then you have the valuations of the energy companies. So, the energy sector is the most unloved sector out there. It's the most underweight sector, the most uninvested sector, if that's a word. Basically, no one's interested in oil stocks. So up until a week and a half ago, yeah, everyone's still talking about, okay, well, should we buy more PME? Should we buy more zero? That's, that was the topic of conversation. No one even thought about, well, except for us, a few of us, most people were not thinking about investing in the relic that is oil. So as a percentage of the S&P 500, the energy sector is closer to 3%, whereas it used to be, sort of 11 to 15% on average. 3%. So, I mean, my clients, we're close to 30% energy sector exposure at the moment. So it's very underinvested. No one owns the stocks. And you'll see a huge increase if you have a look at what gold's done in the past couple of years. The gold price has gone up for a couple of years now. Gold miners, their share prices have gone up multiple times, and it's still quite underinvested. So, energy is even worse. So I think there's immense upside here for energy stocks, and that includes Karoon. If we have a look at this long-term chart, so this is going back 20 years. Okay, there's a bit of upside in the short term that on this monthly chart, we can see that under that blue line, it's been forming a massive base. So from a technical point of view, that blue line is near around sort of 270-ish. If it breaks out of that base, you'll get substantial upside. Maybe it seems too good to be true. Again, go back to some gold stocks like Perseus, Regis. When they broke out of their base patterns a few years ago, they've already gone up 4 or 5 times. So I think there is a lot of opportunity in energy. Obviously, we're not just in oil and gas. We've got coal exposure, uranium exposure. I mean, we've got a number of picks. The main oil stock that we have is Woodside. I think Woodside, for those watching, is probably the easiest one compared to Karoon, less risk, and it'll be the go-to stock. So when everyone realizes, okay, things might die down in the next few weeks and then it starts to kick on again, but over the long term, Woodside will be the one that most people just feel more comfortable with investing in. So that'll be the one that will see all the flow of dollars. So I mentioned this a couple of weeks ago on this show before the war broke out. Woodside's the one that I think is the go-to, but Karoon has quite a bit of upside as well. So in short, what I'm trying to say is,
what are you
yes,
trying to say?
Karoon is a buy.
Okay.
It's a buy. Use the volatility, any dips in the next few days, use it to buy. Have a look at it again in 6 months. It'll be quite a bit higher.
Okay. Luke, so we understand in Michael's view what's going to happen with oil in the energy complex. You?
Yeah, look, Michael's not wrong as usual. He's always, every time I come on with him, I'm always impressed with the, how we kind of get to the same answer from two different sides of the kind of equation.
Next week, I'll pay you later.
Ben and I actually visited, we've been bullish oil for a while as well. We actually went over to visit Brazil and the US and saw these assets in September last year. The company is kind of going through a relatively high capex period at the moment. They've got what's called a flotel, which is like a maintenance vessel, which pulls up alongside the FPSO in the southern Santos Basin in Brazil, and does a heap of maintenance. That's going to cost them, $60 million and disrupt production. And, if we want to talk to Michael's chart, that's probably what's going to keep it in that kind of that range, that lower range it's been in maybe, for the next few months. But that work is really going to set the business up, for better uptime, reliability, and consistent production going forward. And, I think Karoon know that. They've got their on-market buyback in place. They've got, already paying out 20 to 40% dividends, and management's been pretty keen to pay out dividends regardless. They've got the best exposure from a NPV to $1 move in oil price perspective of any company on the ASX, and I'd almost argue of any company in the world, almost of a meaningful market cap. And I think, from our kind of view, it's the best way to play the oil price. We own it in both of our funds. And I think, Karoon looks like it's not going to be like an overnight success story. I think this capex is going to keep a lot of fundies on the sidelines, but eventually, in 12 months' time, I think if the oil price is still high, there's certainly value in Karoon now. I think, it's implying only a $67 oil price at the current share price. Like Michael, my view is it's higher oil prices for longer.
That is a buy from both of my guests for the stock of the day being Karoon.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.